My personal opinion is that you always have to be the buyer beware, because when you have multiple parties, which in my opinion were quasi manipulating the stock, or moving the stock upward or downward, this is where the danger lies. And these hearings are going to uncover, was there malintent, or was it just simply that the little guy wanted to get back at the big guy, hedge funds per se? So they're going to be looking and asking some important questions. I don't think this is a great case for regulation. I think that this was, could it happen multiple times? Yes, it did. But on the grand scale that we're talking about, I don't see it as a continuing factor. And if it does become that, then of course you're going to see a lot more regulations coming out. But this is a case, hey, let's not throw the baby out with the bathwater, as they say. Let's take a look at this. Let's say to ourselves, what is the best way to prevent this kind of dangerous manipulation? Because what can happen here, what I feel could happen here that is dangerous, is that investors who come late, or who are on that message board and say they come late to the party, they're left holding the bag. They're left, taking the loss, or getting into a stock that could take years, or if ever, to come back. And that is the biggest thing the regulators are looking to see. They just want to make sure, their first job is to protect the public. So you want to make sure that you're protecting the public. And if the case calls for regulation, that it's done in the right way, and that it is not heavy-handed, and that it will teach the parties involved that maybe this is not the way to do things. But once again, I'm speculating. I really don't feel that this is a strong case for more regulation at this point. All these records being pushed up throughout the last couple of weeks really haven't had any sort of breather per se. And maybe the economic numbers, the retail sales were good, but then the economic numbers with unemployment were not so good. So we say to ourselves, what's the truth behind all that? The truth of the matter is that I think that the market's taking a little bit of a breather, taking a little bit of a breath, so that way we can absorb more numbers and more data coming in. And once again, supply demand, which the market is based on. And from that point on, to say, okay, are we going to break through more records, which I absolutely believe is going to happen. We're going to break through. I think we are heading into another bull era for this market. Some people can disagree with me. I've been saying this for more than a year now. I think this is the year, with the vaccines coming in, with the data that we're seeing in retail and in strong growth areas in businesses. I think this is going to be the year that we're actually going to start, this economy is going to start recovering. I mean, think about it. We were in a recession this time last year because of the COVID. So we're going from a recession to kind of quasi-expansion at this point. And so I could see the numbers in the market start moving up on the upside. More people are going to be getting back to work because there's going to be more vaccination out there, and a lot, just the positive news, it's on its way. So we're going to have to sit tight and hold on. I wouldn't be afraid to take some of this money and go back into growth stocks, especially ones to take this and use it as an excuse to get back into some of these tech stocks, because they might have shaved off 25 to 30 points. And that's, for the bigger tech stocks, that's a significant discount, which is not a bad thing if you're looking for a bargain in the market. Same thing if you're looking at value, or the opposite end of the spectrum. A lot of those stocks are just starting to wake up now and move to the upside. You want to be a part of it. You want to make sure that you're getting in, but maybe not with all your resources and all your cash, but a little bit at a time, slowly getting your feet wet back in again. Another area that we always want to stay on top of is fixed income, namely the treasuries and corporates. In this particular case, corporates, because it's amazing. You might get a quick move to the upside of 3 to 4% in a month. on certain, I've seen it in municipalities. I've seen municipal bonds. I've seen it in some certain long treasuries, where the price just appreciates. People forget bonds can move like stocks sometimes. And, but here's the thing, you got to be careful. The minute you see that kind of movement and you take that kind of movement, yeah, it's in your best interest to take that profit, because anytime you can make a yearly interest, on a corporate bond or what have you, always a good time to take your profit and look for other areas to deploy your capital. The crypto market is hot right now. There's no other word for it. I mean, you're over 51,000 on the Bitcoin, and you say to yourself, well, I've owned it since 300. Do I get out now or do I get hurt? And I say to you, maybe you want to take a little bit off the table, but as I've said in other broadcasts previously, you want this to be part of your overall portfolio, but you don't want to go more than 5 to 10% with it. So that way you're protecting yourself, you're looking out for the people that you're with, and at the same time, still participating in an asset class that I believe is going to be a pivotal asset class moving forward. So whether they stay in or whether they get out, all I could say is you're right. You're going to be okay. You just have to make sure that your focus is your focus and your goals and objectives. Follow that and you'll never be wrong.